I'm going to be breaking down what exactly I'm seeing on gold right now. I'm going to be going in detail, going in depth on this, and then I'm going to share with you guys a trade that I took on gold. I'm going to be breaking down everything you need to know about that trade. So let's get right into it. So you can see that we're on gold right now. So from thereabouts the beginning of March, we have been dropping. We've been dropping for roughly about 6 months. And the reason I wanted to share that with you guys is because I always say to you guys, what can you see right now? So like I said, I'm going to be going into detail with this. I'm going to be sharing you guys my bias and how I develop or build a case to know exactly where I want price to go to. Price has been dropping. You can blatantly see price has been dropping. It's not going sideways. From the very top to the very bottom, price has dropped in the past 6 months about 3,900 pips. You can also see prices making lower lows and lower highs. And the very lowest one I'm going to be referring to now is this one here, from this high to this low. And so the reason I've used this fib tool is because I want to show you guys that price traded up into a premium. We know that price is dropping on the higher time frame, and its current range, which is this high to this low. What's happened so far? We know that price has also traded back up into a premium price. So you have to remember that if price is trading lower and it's traded up into a premium price, where do you expect it to go to? You expect it to drop into a discount. So a discount is anything beneath this low. So don't forget, one more time, we're trending lower and price is at a premium. So whenever I say where is price in relation to its trend, it was within a premium and now it's dropping or it's expanding lower again. So I'm expecting price to run out this low over here to drop into a discount. That's just the ultimate foundations of how I'm developing this case right now. We understand price is dropping. Okay, what did price do? Price traded up into this imbalance over here. So what I've done is I've marked up the imbalance from this candlestick's low to this candlestick's high. This is the imbalance, and this is where price has traded into, and now it's dropping again. This is something I mentioned to my mentees, that the highest I wanted to see gold go is into this imbalance and then drop, and now it's doing it and it's moving so clean. Cool. So now we understand that price is dropping. I'm gonna drop down a time frame. So this was that imbalance we saw. This was that imbalance on a daily time frame. This is equilibrium. So price traded up into equilibrium. The moment it gets above this area, price is at a premium, so it's good for a drop now. What else have we seen here? When I go back out to that daily time frame, what do we see here? We see that there are all kinds of lows. There's quadruple lows here. There's 4 lows here. Not only that, there's also another set of equal lows to the left. And so in other words, I'm anticipating price dropping, but ultimately running out the liquidity, because we know that there is tons of sell side liquidity resting down here. You know, all kinds of money is resting down there. So this is where I'm anticipating for price to get to. I also understand that there's relative equal highs, but price is still moving lower right now. So I'm not even looking at this liquidity right now. The moment price begins to mitigate down closed candles, then I'll be looking at this liquidity. But for now, I'm not even interested in this. And if you want to know more about that, you can check out my last video on mitigation. That's going to help you a lot. I'm going to bring you to today. So yes, I've been in and out of sales on gold, and that's one of the things as well. Just because you have a bias that price is going to trade from this level and run out liquidity, it doesn't mean you have to hold the full position, or it doesn't even mean you have to hold the position full stop. You can be taking liquidity when you want. You don't have to hold it down here. And not only that, you can also day trade, close off your positions, and then look about cashing an entry another day. So that is my bias on gold. I want it to run out this liquidity, and that's the only thing I'm seeing. The reason I'm not trusting for this down close candle here, this down close candle right here, you guys can see it from this high to this low. That's a down close candle right here. The reason I'm not trusting that down close candle to hold is only because we did not take out the high. You know, if we had taken out the high with this down close candle, I would have been a bit more confident taking buys from this institutional candle. However, it did not do that, and so it becomes less reliable. It becomes less reliable, less trustworthy, whatever you want to say. And this is why I'm not looking for this to hold. Yes, there's going to be a local bounce, because at every institutional candle, there's going to be a bounce, but it doesn't mean it's going to hold. So this is why I'm looking for price to run out this low. You can still play it sensible and trade it into this down close candle, specifically into the imbalance. But just know, if you're holding to a full position, it might take some time before it runs out that liquidity. And so if you're happy enough and you have the psychology to handle being in some kind of consolidation in here, then, you know, by all means, do what you want to do. You can hold. But if you're not, then make sure you take your partial profits. It's a big game changer when you're taking partial profits. Now we have our bias. Now we understand what price is doing. One thing you need to notice as well is that when price is making its way lower, is that it's cleaning up inefficiencies along the way. What I'm going to do now is I'm going to show you some inefficiencies that it's cleaning up. So when I say inefficiencies, what I mean is it's cleaning up imbalances along the way. There is inefficiency here that price has not cleaned up. So let's look at the other ones now. From down here, you can see from this candlestick wick. So I'm going to zoom in from this candlestick wick here to this candlestick low. There's inefficiencies. What does price do? It comes in and cleans it up and then drops. When it drops, what does it do? It leaves more inefficiency here. You can see it fills in that inefficiency and then it drops again. Let's just keep running it down. Let's keep going from this candlestick wick low to this candlestick wick high. What happens from here to here? It fills it in and then it drops again. And there we go again. Let's keep going. This one's low to this high. You can see if I just bring my box tool here, it fills it in again and then drops. And then the very last one, over here, you can see from this candlestick wick low to that candlestick wick high, those wicks do not touch. And so what happens once again, price comes in and fills in the inefficiency and then drops again. So that's price showing you that it wants to shoot to the downside. Okay, so I've just removed some of those imbalances because I wanted to show you guys one more thing before we get going with how I jumped in with my latest position on gold. If you're getting value from this video, I want you guys to hit that thumbs up button. Let's try and get 500 likes in this video. So now what I wanted to do is I wanted to show you guys some of the things that retail saw, what retail currently seeing as well. This is not a retail bashing video. I know a lot of you retail concept traders like to just bash me on this stuff whenever I start to share this information. But look, this is for your own good. You can take it or leave it. You can take the meat, leave the bone, do whatever you want. What retail would have been seeing? They would have been seeing some kind of support zone here. I'm just going to leave it like this, leave a little purple line here. I'm just going to expand this just a little bit. There we go. There's been multiple touches on this retail support and resistance line. And so what retail was seeing was this. So when price traded down into this support zone, okay, when it broke out of this level here, it became resistance turned support, okay, and when it came into this, they would have got this engulfing candle on the 4-hour time frame and been looking for price to trade to the upside. This engulfing candle really, it tricked folks into going long, and as you can see what's happened, price has traded against them. And this is specifically for the retail concept traders who trade on the lower time frames. Obviously if you're trading the very, you know, larger time frames, you would have identified there's a trend here. Maybe you wouldn't have taken this move, but I know there would have been a lot of retail concept traders who took this move here. And then not only that, when price traded back down into this level, what did it give them? It gave them another bullish candle. This would have been their double bottom or their equal lows, you know, which is a buy sign to take it to the upside. But don't forget, look, we know we're in the high time frames and price is dropping. This would have been their sign to buy price, and they would have jumped in with buys literally and taken it to the upside again. When price broke beneath and then came back up to this level, they might have seen this as some kind of support now turn resistance, and now they're going to be jumping in with sells. And by the way, if they did that, they would have won that trade. They would have caught a beautiful amount of pips. Roughly, they could have had a potential of 130 plus pips. Okay, that's amazing, that's beautiful. But this only worked, this push higher and the drop here only worked because it was aligned with what the banks were doing. And that's normally when the concepts that retail trading actually work, is when it aligns up with the banks. What they were really doing is they came back to this area to balance out the inefficiency, or to offer buy side to the market, because when price dropped this fast and left inefficiency, they came up to provide buy side to the market, and so providing even trading. Now coming to my actual entry now, you guys really know where I'm looking for gold to drop to. You guys know the deal on that already. And so this is something else I wanted to talk about in this video as well. I'm giving you guys quite a lot in this video. You may have to run this back one more time to make sure you grasp these things. So I'm going to get rid of this support zone over there. There we go. So now when it comes to my entry, I knew that when price traded beneath this level, traded beneath these relative equal lows, I wanted price to return back to the order block for an entry. And so my order block is here, all right? This is an order block right here for the very high of it to the very low. So from the very high to the very low, this is the order block that I wanted my entry to come from. And it's not just as simple as, okay, just jump in here. If I bring up my ruler tool now, you're gonna see how large this order block is. So it's roughly about 50 pips. Ain't nobody having a 50 pip stop loss. No one's having a 50 pip stop loss. I know some of you would have been comfortable having a 50 pip stop loss. I'm never using a 50 pip stop loss. This is how I play my area of interest when it's 50 pips or when it's just a large area of interest. I would look to jump in nearabouts the very low of the order block, because that is part of the order block too, okay? And if that plays me, then I would normally wait for some kind of reversal sign to then take it lower. So what I'm going to do, I'm going to throw in the replay mode. And what I'm going to do, I'm going to go from here. There we go. Then I'm going to go down to the 50-minute time frame to show you guys what I'm expecting. So you've seen I've drawn up my order block. Now I'm going to play out what happens. Okay, cool. I'm gonna jump down to the 5-minute time frame. Now I'm down to the 5-minute time frame. I wanted to show you guys exactly what I was thinking when I'm looking to trade. This was an early trade for me, and the reason I jumped in was because there was imbalance over here after price expanded away, and I wanted to see whether price was gonna respond off of this imbalance first before going lower. And I had my stop loss above these highs, roughly about these highs, and then this is where price stopped me out. I'm gonna show you guys my execution for this trade right here too. And so in other words, I jumped in way too early. Sometimes it happens, but then this is what I did next. I didn't get emotional about it. I waited for price to actually hit the order block and then give me a reversal sign. Let me go down the time frame real quick. I'm gonna go to the 1-minute time frame. So cool. I'm in a 1-minute time frame now. Okay, cool. So now check this out. Here, when price traded into the OB, it then pushed lower, but what did it do? It traded into this inefficiency and then pushed higher. When price trades up into this up close candle here, I can't trust that because price could still burst through these highs. There's been no sign telling me that it wants to go to the downside yet, okay? The moment it takes out this low over here, now I'm more interested. But now price is traded up into this area, I'm more comfortable to take the position to sell with my stop loss above the high. And what I did is I took a sell when price was roughly about here, and I put my stop loss above this high over here. And it was roughly about a 20 pip stop loss, but with the potential of this trade going all the way down to those triple lows, we're talking about a massive potential amount of return. And so this is why I wasn't concerned about having a 20 pip stop loss. The reason I entered when price was pushing lower is not because it was pushing lower or there was some kind of rejection. It's only because that is where I saw gold at the time I wanted to place the trade. I was comfortable with my stop loss. I was comfortable with my risk. I'm only risking 1%. I've marked up these lows. Why? Because these are relative equal lows, and this is where I want to take my very first partial trades, and then I'm going to let the rest ride to see whether it can run out that low. So as you can see now, look what happens. Price trades into this level. Beautiful trade. This is not where I'm looking to exit my trade, but this is where I'm looking to take partials. I completely missed taking partials there. It is what it is. It happened so quick. I left the screen, came back, the thing had just dipped here, but it's not over yet. I've come out of the replay mode and you can see gold is still hovering around this level. I'm anticipating Asia to take out this low. I want to put on my executions just to show you guys what I was referring to. Here's my executions. This is the very first trade I took. Like I said, just as price traded up into this imbalance, I was good to go. This is the trade that got stopped out, but then I entered again here. I'm gonna go down the time frame so you can see it a bit more clearly. You can see here, once again, I'm going down to the 1-minute time frame so you can see it clearly. Here's everything on a 1-minute time frame. This is where I entered. This is where I got stopped out with the wicks. Okay. Then I took this position. You can see it here now. Where is it? There it is right here. And the reason this is a bit off is because this is where I managed to catch it on Trading View here, but on my actual MetaTrader 4, this is where I actually caught the trade. So that is my analysis on gold. That is also why I'm in gold sells at the moment. And this is just not to say that you guys should just jump in with sells. There's obviously a lot that goes behind it first. So definitely backtest everything you're seeing right now before you look to enter any single trade. It's been your boy Harrison. Peace.